Hello, welcome to CDH's YouTube channel. My name is Ko Fujimoto. I'm going to talk about 5 things green card holders must act on retirement accounts when going overseas. So let's get started. So these are the 5 things. Let me lead through. Number 1, consolidate retirement accounts. Number 2, set up my Social Security account with SSA, Social Security Administration, and check the U.S. Social Security agreement with the destination country where you are going. Determine if your financial institutions can hold your 401k or IRA. Number 4, know the tax consequences if you give up your green card. Number 5, select the right professionals and consult with them in advance. So let's get started. I am not recommending you to roll over your 401k account into one IRA account. I understand that many individuals, if you live in the United States, have more retirement accounts, multiple 401k or IRA accounts, and maybe some investment account. But this is my point here. If you consolidate retirement accounts and then you go to overseas, it's easier to manage from overseas. And of course, it's easy to monitor. At the same time, on the other hand, if you keep too many accounts with multiple institutions in the US while you are in overseas, it's difficult to manage from overseas and difficult to monitor. Obviously, when you move to other country, you need to spend your energy, lots of energy, to try to quickly understand local countries' rules, regulations, and systems, and cultures, and so forth. You don't have, a normal person would not have energy left to monitor 15 retirement accounts held in the U.S. soil, right? So it's kind of a very common sense, but I think it's essential. And at the same time, I'm not saying that you should consolidate everything into one, because as I explain later, the U.S. financial institution can change its policy and without warning, and they may tell you, hey, you cannot hold your retirement account in our institution from 3 months from today. So it may be wise to keep at least 2 financial institutions. So to hedge the risk, might be wise to use 2 financial institutions. That's number 1 recommendation. Number 2 is about my Social Security account. You see this my is italic. I don't know why, but it's italic. My Social Security account before you leave. And this is the snapshot of Social Security Administration's website. Set up your My Social Security account. There are a few things I want to explain here. Number 1 is if your permanent address becomes one at overseas, in my understanding, you cannot set up My Social Security agreement because there is no option available with the overseas address. I think it's a state, U.S. states, and that's where you can set up your Social Security, My Social Security account. So that's number 1. Before you leave, you must set it up. Number 2, when you set it up, like many online user account, it requires you to set up a two-step verification process. Well, you cannot, if you live in the US, you can use your US cell phone to receive a text. However, if you live overseas, you cannot use your US cell phone. You probably need to change your cell phone. So you cannot use your US cell phone as a part of a two-step verification process. That I think I want you to keep in your mind. And secondly, I think know your destination country has a social security agreement. It's commonly called social security agreement with the US, and know the benefits, because let me read it for you. The US Social Security Administration's default action for the green card holders is to stop the benefits after the sixth calendar month in a row that you are outside of the US. So default is after 6 months your Social Security benefits will stop. However, there are about 30 countries that have a Social Security agreement with the US. If your Social Security agreement guarantees the continuance of Social Security benefits, you are safe. So to find out if your destination country has an agreement, or if you can keep receiving the benefits, you can Google here payment abroad screening tools on the SSA site to determine if you can keep receiving Social Security benefits. And that's, I think, very critical. It's zero, nothing, or full amount of Social Security benefits. That makes a huge difference. Okay, the third action item is, can your financial institutions hold your retirement accounts? In general, many of the financial institutions do not want to hold your retirement accounts if you become US non-resident, because of the high compliance risk and also high compliance cost. So, however, there are few, because I hear, well, that institution, that company is very friendly to green card holders. That institution, that company is very friendly to people who go overseas. Okay. So there are some financial institutions who may be able to help you out. But I want you to keep these two critical knowledge. One is, each institution may have a very unique policy, and I think it's obvious. It's not the it's not the laws. It's a policy. It's company's policy. Okay. So this is easy to understand, but at the same time, that policy, it actually is very, very hard to find out. It takes your efforts to find out exactly your particular financial institution's policy is. So do not take it lightly. It takes efforts and digging and pushing and asking, because not everyone knows. Okay. Number 2, suppose you know the policy and you feel confident that at present they can keep my account. Great. However, institution may change its policy in future without enough warning to you. Again, it's a company's policy, so they can change it at any time. Okay, so from these two critical knowledge, there are things that you should be aware of. Number one, accurately find out the current policy of a financial institution. Can they hold the account? How can I liquidate the account from overseas and so forth? And be ready when your financial institution says they cannot hold your investment anymore. You may want to, and I think this is a repeat, may want to keep two financial institutions' accounts to hedge the risk. This is a plan B for you. Because if you have only one account or one financial institution in the US, you rely on them, and all of a sudden they say they cannot hold your retirement, do you have to go back to the US and to set up a different accounts? And that, you'll be busy in the local country, so it may be good to have two financial institutions. Both should be very friendly to you, and then you can transfer the account or transfer the funds from one institution to another. Okay, let's get to number 4. Tax consequences when you return green card. So you cannot, you cannot usually maintain your green card if you permanently move to other country. 6 months is a one threshold, and then with the residency, what's the name of the Form I-131? The residency permit, or I'm sorry, I forgot the name. I'm not the immigration attorney, so there are one way to extend your 6 months to, I think, 2 years at one time, and you may be able to do it twice. But at some point of time, if you live in overseas, you may need to give up your green card. Giving up meaning returning and losing your status of U.S. permanent residency. So there are tax consequences when you give up your green card. And then I'm going to talk about specifically today about 401k versus IRA. 401k versus IRA. And there are other tax items that you may need to be aware, but I'm going to focus on the retirement accounts today. If you decide to give up your green card, you may become a covered expatriate. Some people will not become a covered expatriate, others do. I am not going to discuss the criteria who would be a covered expatriate or not today, because it's beyond the scope of this video. But let's assume that you become a covered expatriate. In terms of 401k, the rules are you may defer U.S. taxes. You have a choice that you can defer taxation, defer up to when you actually receive a distribution from the 401k. When you defer and receive the distribution, there is a fixed withholding tax rate, which is 30%, regardless of your, now this one is a income tax treaty. So the 30% withholding rate is fixed. And you may also need to file tax forms. It's called Form 8854 every year, as long as you have a balance left on your 401k. In terms of IRA, the rules of IRA's taxes, if you become a covered expatriate, is strikingly different from that of 401k, because it's an immediate U.S. tax in the expiration year, even if you do not withdraw your IRA. Mr. IRS, I am not taking the money out from IRA, but you are taxing me for the entire amount of IRA because I am a covered expatriate at ordinary income tax rates. This is a huge impact if you have lots of money held in an IRA account. So I want you to be aware of this difference in terms of your retirement account when you abandon your green card. And if you decide to live in foreign countries permanently, for sure, probably, and even if it's temporarily, depending on the duration of your stay, you may need to give up your green card. So you may be asking me now, hey, Mr. Fujimoto, if I'm not become a covered expatriate, then is there a difference? Well, if you're not giving up, or if you are not become covered, if you're not the covered expatriate, then I don't think there is any difference in taxation. At the same time, depending on the duration, which probably may be short because of the immigration restrictions, but while you maintain your green card, then U.S. tax obligations continue. Well, I hope this slide is kind of hard to explain. So let me just summarize here. If you decide to give up your green card, some will become a covered expatriate. When you become a covered expatriate, there is a striking difference in the U.S. tax treatment between 401k and IRA. IRA is straight taxes, even if you do not withdraw. 401k, you have a choice. You may elect to defer U.S. taxes. You may elect to get 30% taxes withheld from your distribution, of your each distribution, and you may need to submit one tax form each year as long as you have a 401k balance left. Okay? While you are keeping your green card, you still file U.S. taxes, so nothing different from your normal Form 1040, except maybe you may want to use a foreign tax credit. But let's set it aside. Now, getting back to the covered expatriate discussion, if you are not a covered expatriate, there is no difference of U.S. taxes between 401k and IRA. Traditional 401k, traditional IRA, the Roth 401k, Roth IRA. Okay? It's a complicated subject to discuss. The final, number 5, is select the right professionals. And this is relatively simple to explain. So, as a client, you need to focus on his or her experience in cross-border transactions. If the person is honest, he or she will tell you, I don't have enough experience in dealing with this type of thing, so you should choose other advisor, or you should choose other professionals. And very honest, and that's a right attitude, I think. However, some people may say, oh no, I know everything, so work with me, I will help you out. Now, you should be able to tell if his or her action are, truthful or reliable or not. Okay. Now, second point, one professional can possibly know the details of US rules and other countries' rules at the same time, because US rules itself is complicated enough. It's very hard to know everything, right? Everything, even in a cross-border section, it's hard, it's changing, it's complex, it's hard to figure it out. At the same, so it's impossible. I think it's impossible for one person to have the same level of expertise in other countries' rules. So this is what I said. At least a general knowledge would help, right? General knowledge would help. I think this is true, or this is true in a sense from the viewpoint of experience too. And also, the general knowledge also means that he or she has a good network, excellent network to refer you to the right professional in your destination country. Yeah, talk to this person, he knows taxes. Talk to this person, he knows the immigration status. And talk to this person about housing and so forth, retirement account and so forth. You need to have an advisor who has a good network of your destination country. And finally, I think I'm repeating this a little bit. If the professional is willing to refer you to the right person, I think he or she has a right attitude. In a professional world, it's called competency. It's one of the rules of ethics. It's a competency rule. If you cannot competently advise your client, the person should not take you as a client and should decline. It's actually a good sign as the person is trustworthy and is a good professional to work with. So with these 3 points, you should select the right professionals and talk to them well in advance before you make a move. Well, this is our disclaimer, and this is our CDH cross-border practices ending page. Thank you very much, and I hope you had a wonderful Labor Day weekend. Yes, I did. I was exhausting and busy 3-day weekend, and we are getting ready for, I think, fall. Let's have a wonderful fall season in the United States. So thank you very much. Have a wonderful day. Take care.